So as you guys know, my second largest stock in my entire portfolio is Microsoft, ticker symbol MSFT. And in recent history, they've been trading kind of up and down a little bit, sort of in a range that we'll take a look at in a second. But in 2019, they've finally been breaking out and really surging in stock price. And most recently, it was fueled by another very impressive quarter of earnings. So today we're going to talk about their most recent earnings, and I'll give you guys an update on the stock, where I see it going in the future, and if I plan on cashing in any profits or just kind of holding Microsoft for the long term. All of that and a lot more in today's video. Let's get started. What's up everybody, my name is Ala and welcome to my world of stocks. So when looking at Microsoft stock for the past year, we can see that they've mostly been stuck around this range of $100 to $110 per share, sometimes going a little over and sometimes going a little under. But thankfully the stock has finally broken out in 2019, surging well over $120 per share, at one point even breaking $130 and reaching $1 trillion market cap before coming back down slightly. For reference, I recently made a video about Disney stock because that's my number one largest position, and they too reached an all-time high recently, already climbing by over 25% this year alone. So needless to say, my portfolio is doing extremely well so far in 2019, despite what all the trolls like to say in the comment section. But back to Microsoft, they are currently up over 3% the day after reporting phenomenal earnings, which we'll take a look at in a second. But this now puts them up almost 5% for the week, up over 27% so far in 2019, and up over 223% in the past 5 years. By the way, in case you haven't seen my previous videos, I did most of my buying at under 100 and also a little bit above, but overall, my average cost basis on this stock is still well under that $100 mark. Now turning to their earnings, Wall Street was expecting EPS of $1, but Microsoft beat that with $1.14 per share, and they were also expecting revenue of $29.84 billion, but Microsoft beat that number too, coming in at $30.6 billion. By the way, they also beat earnings in each of the 4 previous quarters, so Microsoft continues to hand Wall Street L after L. But going back to this quarter, we can see that year over year sales grew by 14%, operating income by 25%, net income by 19%, and EPS by 20%. So it's really amazing how this nearly $1 trillion market cap company is able to keep growing at these insane rates. It just goes to show how incredibly well run the company is. Now we can see that these strong results were primarily driven by their intelligent cloud segment, which jumped over 20% year over year. And if we break down the results a little further, we can see just how impressive the quarter has been, with double-digit growth in nearly all of their different products and services, with some of the clear standouts being Office 365 at 30%, LinkedIn at 27%, Dynamics 365 at 43%, server products and cloud services at 26%, and Surface at 21%. But check this out guys, the real star of the show is absolutely Azure, Microsoft Azure, at a massive 73%. And if we use constant currency, the numbers get even bigger, so it's really impressive. By the way, Azure is only second in the overall cloud market to Amazon Web Services, so the fact that they're still growing by this really large amount is still pretty unbelievable. Full disclosure, Amazon is currently my 4th largest stock, but even though I love what Amazon is doing, and it's true that they are well ahead in the cloud computing market, when looking at a research report from RightScale that surveys over 500 enterprises with over 1,000 employees, Azure actually saw higher year-over-year adoption growth of 35%, while Amazon Web Services lagged behind at only 15%. And according to Synergy Research Group, just the enterprise software as a service market alone, which entails business software being delivered via the cloud, is worth over $20 billion a year and is growing at an enormous rate of 32% a year. And guess who's the leader in that market? It's actually not Amazon, it's really Microsoft, with about 17% of the market thanks to Azure and their expertise in collaborative business software like Office 365, Exchange, Skype for Business, and more. These are areas where Microsoft just blows Amazon and any other competitor out of the market. On top of that, they already control over 76% of the desktop operating system market with Windows OS. They also recently acquired GitHub, which continues to attract more and more coders and developers that will probably lead to a future where Microsoft tools and services are implemented into just about everything you can think of. They also acquired LinkedIn, which continues to be the sort of Facebook for professionals. And during the conference call, CEO Nadella mentioned that marketing solutions was up 46% year over year, while concessions rose by 24%, with engagement reaching record levels, meaning that more and more employers and employees are using the platform, while employers continue to pay for services to find the right talent, while more job seekers are also paying for advanced features to help them find more relevant and higher paying jobs. And the site now has 630 million members, which is pretty massive. They're also tackling the autonomous driving market with partnerships with Ford and Volkswagen as they integrate cloud services and data analytics into connected cars, again thanks to Microsoft Azure. And as if all of this wasn't enough, Microsoft is arguably the biggest player in gaming, a lot to do with Windows PC gaming, but also Xbox. I know Sony is ahead of them with PlayStation, but Xbox is still doing pretty well for Microsoft. By the way, that market is estimated to be worth over $180 billion by 2021. And this past quarter, they saw double-digit growth of their Xbox software and services, in large part thanks to Xbox Live and Games Pass. Xbox Live now has 63 million subscribers, and Games Pass is being referenced to as the next Netflix of gaming. Keep in mind that this growth is despite the fact that we're pretty much at the end of the current generation cycle, with new consoles expected to launch sometime next year. Nadella also mentioned during their earnings call that Project xCloud will launch public trials this year, and if you haven't heard of that, it's a sort of revolutionary new technology that will allow Xbox Live subscribers to play console quality games on their mobile phones or tablets by streaming the games through the cloud with Microsoft Azure. So you can see what a huge asset their Azure infrastructure is for the entire company, and they continue to implement it across all of their different businesses. And if the incredible stable stock performance for the past decade wasn't enough to entice new investors, they also distribute a pretty nice dividend. Now the yield isn't extremely high at just about 1.5%, but they also have a relatively low payout ratio of less than 50%, a double-digit 5-year growth rate of over 12%, and 16 years of consecutively growing that dividend every single year, even through the last recession, all of which makes this a pretty compelling dividend growth stock for the long term. And you guys know how much I love my dividend growth investing. And by the way, their balance sheet is also one of the best out there, with cash at over $11 billion and current assets of almost $160 billion, which that alone, by the way, almost covers their entire liabilities in total of around $168 billion. Keep in mind that they still have over $260 billion in total assets, so they are well positioned and well equipped to continue making acquisitions and fueling growth investments in the future. Now, their valuation isn't all that much of a value at this time, with a trailing PE ratio of almost 30 and a forward PE of 25, but you gotta figure that for the amazing company you're getting with all the future potential of cloud computing, artificial intelligence, and the various other markets that they continue to tap into, this price isn't really all that crazy. Not to mention that you also get arguably the best management team out there, with one of the best CEOs in the world in Satya Nadella, who's really pushed them to be more of a services and cloud first company, and we can see how much Microsoft has been benefiting from those moves. Still, I have to be honest with you guys, I'm not so much in the business of buying stocks when they're reaching all-time highs. I more so like to buy stocks when they're going down. I really feel like that gives me the best opportunity, the best chances to beat the market, and I'm always trying to beat the market. I'm always trying to get the biggest, the highest returns I can possibly get. And the best chances I have for doing that is buying stocks when they're going down, when nobody thinks that they have any kind of upside potential, and then hopefully, the stock recovers and takes off and things like that. But anyway, Microsoft overall is obviously a pretty safe bet. It's a company that is already extremely dominant, but at these levels, reaching all-time highs, about $1 trillion market cap, I'm not exactly eager to add to my position at this time. It's already my second largest stock, so I don't really need any more exposure to it. Having said that, I also don't have any plans on selling out of my position anytime soon. I like to look out pretty long term. So whenever I'm investing in a stock, I like to think, where can they be in like the next decade or so? And when I look at Microsoft, I mean, I think that they're going to be really dominant and in higher positions in the next, couple decades, few decades. I know it's hard to predict the future, but I always kind of try to think that way. And if anything changes between now and then, obviously I'll make adjustments to my position. Anything can change with a company, but you'll see that, whenever a company is going through changes, you'll see that, you'll be aware of it, and you'll make adjustments. I've had that kind of experience with Nintendo. Nintendo used to be like my biggest stock, and I ended up trimming my position, cashing in some profits, and it paid off. The stock kind of came back down. Now Nintendo is doing pretty good again, but I still held on to a position, but I saw that the company was making changes that I didn't really like, so I kind of lowered my exposure to it. But right now, Microsoft, I love everything that Microsoft is doing, so I don't have any need to lower my exposure to Microsoft. On top of that, they are a fantastic dividend growth stock in my opinion, and with dividend growth investing, you don't really sell out of positions. You try to buy them early on and then hold them for many years and hope that that dividend turns into a much bigger one over the future, along with a much lower cost basis because you were buying in early on. So with Microsoft, again, just don't really have any plans on selling, but if anything changes, I will definitely let you guys know. I think that's about it. Let me know if you have any thoughts or comments down below, and hit the like button if you enjoyed the video. I'll catch you guys in the next one. By the way, let me know what stocks you guys are invested in. I love reading. Those are my favorite comments to read. When you guys tell me what stocks you guys are investing in, when you tell me, these are my top 3 stocks, things like that, I love to read those comments. It's just a lot of fun, and I feel like it's a little bit more of a connection with you guys when I know what kind of stocks you're investing in too. So I just think it's a lot of fun. So please share down below and in future videos too, and I will catch you guys in the next one. Take care. Bye-bye.